Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bolling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello. Ginny Bolling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments. And today we have Jeremy Dyer with us. Jeremy, thanks for coming on.
Yeah, Ginny, thanks so much for having me. Looking forward to the conversation.
Well, you are everywhere I look, it seems like sometimes, and that's because we are both in the space of finding investments for people to make money, build wealth and income, get tax deductions, all of that. So why don't you go ahead and introduce yourself and how you got into real estate?
Yeah, I'd be happy to do that. And thanks for the opportunity. So I'm currently the VP of Capital Formation at Rise48 Equity. I really got my investing and real estate journey started back during the global financial crisis. I was in a very good position, financially, during that time where it wasn't difficult to max out the 401k. Incredibly blessed, to have had, a couple decades worth of experience in the technology sales space, grinding after the next commission check, the next bonus check. And so really the global financial crisis hit at a great time for my wife and I. We started an active wholesale fix and flip company. We were buying houses at 90K a door, sticking 30K into renovations and selling those properties for $200,000 to $300,000. And truth be told, things were going really well. I was in my early, 20s at that time, had a couple of young children. The challenge for us, Ginny, was in 2015, my wife and I decided to double down on children. So we went from 2 kids to 4 kids. And if you're reading between the lines, number 3 and 4 were, yes, twins. And so it really put us into this very difficult position where I had to make a decision just because of bandwidth, right? At the time, I was still actively, crushing it at my day job and my W-2. I was building up a successful, real estate company in the active fix and flip space. But at the same time, I now have 4 children. And I told my wife one day, I said, if I'm going to be a good husband and a good father, I have to find a way to really reprioritize what's important and get balance back in my life. So it was really in 2015 that we made I would say the difficult decision, but smart decision to pivot from being an active real estate owner to going completely passive, where we weren't any longer responsible for, dealing with tenants and trash and toilets and termites, et cetera, et cetera. So we pivoted in 2015 and we invested in our first ever real estate syndication as a limited partner, passive investor in 2015. I used what I called the shotgun approach, meaning I held my breath and I plugged my nose and I hoped for the best. The only thing I knew back in 2015, Ginny, was I knew, I liked, and I trusted the main operator, right? And fortunately, that investment went incredibly well. From 2015 now until today, my wife and I have invested in over 65 deals now as limited partner passive investors, with a dozen different operators and sponsors in the space, a half a dozen different asset classes from multifamily to self-storage, assisted living, flex office, retail, et cetera, which has really allowed us to really learn the business, from a passive investor perspective. And a couple of years ago, my wife and I decided to start telling family, friends, people we go to church with, neighbors, people, of course, that I know in the professional space about what we were already doing ourselves as investors. And I was just blown away at the appetite that exists out there, with individuals wanting to diversify outside of Wall Street and into Main Street. When it comes to Main Street investing, you can either become an active business owner, you can buy into the playbook of a franchise brand, or you can invest passively and not have to do the work yourself, right? And so it was really 2 years ago, we decided to start letting our friends and family know what we were up to. And I was blown away at the interest. And we were able to effectively raise from our network, literally tens of millions and soon to be hundreds of millions of dollars from people that, again, are looking to diversify into alternative investments in real estate. And so one of the main pivotal points for me is okay, now I'm back in that same position that I was in 2015. I've got two jobs. I've got the job of educating people about the benefits of passive real estate investing, and I've still got this technology sales job that I'm grinding away at the commission checks. So it was just about a year ago that I decided to exit a job that I had for almost 25 years in the tech sales space to join the Rise48 team as their VP of capital formation, where now I'm able to bring both of those jobs together, right? The job of raising, equity from family and friends and people that are part of my personal professional network, and then also helping support the Rise48 team in sourcing capital for deals that we're looking to acquire.
Well, that's awesome, and it really is quite the journey a lot of people are going through right now. As I don't know if I shared that with you or not. I opened my eyes to the new laws and the fact that now sophisticated investors could get into it as well, which was important to me. Back in 2000, I realized in 2018 and started reading up on what syndications are. And in my eminent domain world, I bought land, got all kinds of buildings from syndications. I just didn't know I could be one of them. So yeah, it's very, very interesting. And the more people hear, the more they want to hear. And so that's great. So, and Rise48 is a company that we know very well in our investment group. And I've had you do many presentations and not had you, heard you, but you definitely have a company that is amazing there. So why don't you say a little about Rise48 and the track record and whatnot?
Yeah, be happy to do that. So Rise48 has acquired, as of the time of this recording, 62 different multifamily apartment communities in three main markets, one being Phoenix, two being Dallas-Fort Worth, and three being North Carolina. Specifically within North Carolina, we operate in Charlotte, Greensboro, and that Triangle Park area of Raleigh, Durham, Chapel Hill. So 62 different independent apartment communities. We are what are called a value add operator, which means we're traditionally not looking to buy and hold these apartment communities. Instead, we're looking to fully renovate the interior units, increase the rents, force NOI growth, and ultimately exit in a 2 to 5 year time period. The type of tenant that we're looking to cater to is what we call a workforce housing demographic. Okay, so we're primarily targeting properties that are in what we call B class neighborhoods. They're B class properties. These are safe, affordable neighborhoods that we traditionally like to operate in, with good job growth, wage growth, population growth. These are the types of things we look for. And we predominantly target properties that were built in the 1980s, 1990s, and early 2000s, where most or all of the interior units are classic in nature. Okay. We like classic units that we can rip down to the studs on the interiors, fully renovate those units to a higher level scope. We have three separate scopes that we renovate to: gold, platinum, and diamond, depending upon what that local tenant base demands and what we can actually achieve from a yield on cost perspective, which ultimately we're always looking to maximize investor returns, because the more returns our investors make, the more we make as an operator, right? But we're traditionally targeting that workforce housing demographic where we can force value creation through renovations.
Right. Now that's a lot that you unpacked there too. And so for instance, when you're doing the actual business plan, do you ever push it to completion on all units to be renovated, or do you leave a little so-called meat on the bone for the next?
Yeah, it's a great question. I'm glad you asked that. We left a tremendous amount of meat on the bone, as you say, when we were exiting out of properties in the back half of 21 and early 22. Okay. During that time period, we sold 11 properties. We produced over a 2x equity multiple in an average hold period of under 18 months. Okay. So that's really the direct result of us buying properties at a good basis, implementing our business plan, but more importantly, knowing when to sell, right? Knowing when to pull that trigger. And so we're oftentimes, we tell investors, if we're able to produce a 1.5 equity multiple over a 25, month hold period or 24-month hold period, we're going to do that, right? We're going to take profit off the table, when there's profit to be had. But in some cases, it makes sense to extend out the timeline depending upon where we're at in the market cycle. Okay. I've lived through and you've lived through a number of market cycles in our life. I mean, we can go back and talk about things like the dot-com, bubble burst. We can talk about 9/11. We can talk about the global financial crisis, COVID, right? The historic run up in interest rates, the glut of new supply that hit the market in the last few years. All these things are doing is creating different market cycles. Well, the great thing about real estate is if you zoom the lens out far enough, things traditionally go up and to the right over time, right? But there's certain times in the market cycle when it's a buyer's market, and there's times during the market cycle where it's a seller's market. Okay. We sold 11 deals at the peak of the last real estate market cycle back in 21 and 22. We've sold nothing from September of 22 until today. Why? It doesn't make sense in the current market cycle to give the next buyer a discount, right? Until things, until things recover, and things do traditionally recover over time. The important thing for investors to understand is there's three main risk factors that you're looking to solve for. You're looking to solve for what I call operation risk, execution risk, and market risk. Okay. The first two, the operator can control. The third one, they can't, right? They can just simply mitigate against, potential market risk or external factors, black swan events, those types of things, which is why I, as an investor, really only invest with operators that are vertically integrated from top to bottom. Property management is in-house, community management is in-house. They have their own GC license. They can manage the construction process, from acquisition all the way through disposition. And really, from an operations perspective, that they're hiring best-in-class talent. You can be the best lead general partner or the best sponsor in the business, but if you're not attracting and retaining best-in-class talent to carry out the business plan, that's a risk factor for me, right? And so there's a number of different risks that I think it's important for your average passive, maybe non-sophisticated or sophisticated investor to really be asking. And a lot of it, honestly, Ginny, comes down to the leadership, the leader's ability to cast a vision and create a culture and an environment in which they're attracting, best-in-class talent to their operations, because it's ultimately those people that are on the front line that are going to be ultimately responsible for actually carrying out the business plan, if that makes sense.
Oh, yeah. Yeah, it does. And with that comes a cost of carrying personnel. So how many employees do you have now?
Yeah, by the end of this year, we'll have over 350 full-time W-2 employees. Every on-site person that's working, whether you're the leasing agent or the maintenance technician or the community manager, the regional property manager, they're all in-house. Okay. Again, we also have our own GC license in-house. Of course, we use local subcontractors in the major markets in which we operate. But because we're an operator that is renovating thousands of units per year, not hundreds of units, but thousands of units per year, right? We source all of our materials overseas from third-party suppliers through Builders Warehouse and HD Supply. We have fixed rate pricing with those suppliers, which means when we underwrite a deal from a pro forma perspective, if inflation, is still sticky at 2 to 3 to 4%, right? We're actually fixing those costs on the front end before we go into the actual project itself, which means that if we renovate a unit in 24 months from now, the material cost is going to be the same. The labor cost may not be, but the material costs themselves, will be the same as when we underwrote the deal.
And do you ship the supplies to the site and then store them on site, or how are you handling that usually?
Great question. So the three main markets that we're in, HD Supply as well as Builders Warehouse have local offices in those markets. Okay. So there's local warehouses in the three main markets in which we operate. And literally what happens, depending upon the unit, right? Whether it's a 1 bedroom, a 2 bedroom, or a 3 bedroom, that unit, when it's time to renovate, is going to have anywhere from 2 to 4 pallets that are going to be dropped off at the unit. Those pallets come directly, from the local warehouse offices in which we operate. Those pallets are actually loaded up initially overseas in either Taiwan or Vietnam, which is where all of our supplies come directly out of those two countries. And then they basically sit in warehouses until we free up a unit to renovate, in which case then those pallets are dropped off directly at the unit or in the unit for our local suppliers, as well as our contractors to renovate those units. A unit typically takes about 23 days for us to renovate from beginning to end.
And you said you go down to the studs typically?
We go down to the studs. So, I mean, if you think about most classic units, I mean, they've got, old, vinyl flooring, they've got black or white appliances, old cabinet boxes, old shaker doors, old lighting fixtures, old countertops, old sinks, right? And so our platinum or diamond level scope is going to include things like stainless steel appliances, new LVT, flooring, new cabinetry with new shaker doors. It's going to include, new countertops with your modern, plumbing, pull down fixtures, undermount sink, right? And so, I mean, we in some cases we even install subway tile backsplash. So we pick the interior level scope based upon what that local tenant base demands and can afford, right? So for example, I mean, we operate in some markets where the average median home price within a 2 mile radius of a property that we own is $850,000. Okay. Totally unaffordable, for the average workforce housing, type of tenant or demographic. And so in that particular market, where we have average median household income in excess of $115,000, per individual, it maybe makes more sense in those types of markets to renovate interior units to a higher level scope, especially if we need to remain competitive and if we can get, yield on cost, on that CapEx spend.
Right, right. So that's where you might do the subway tile and backsplash and all that good. Yeah. On your bathrooms, are you for the lower finish usually doing a reglaze of the tile?
We are, yeah. And
Yeah.
in some cases, we obviously, I used to flip houses, and so we'd say lipstick on a pig a lot, right? And
Yeah.
so that's effectively what we're doing in some of our lower level scopes, right? Where we might just simply resurface, countertops. We may resurface, shower rooms, those types of things. Again, it all comes down to our ability to produce, a yield on that cost. And truth be told, we have to look at those KPIs every single month, right? We're not just going to spend money unless we know we can make money. So in the space of renovating multifamily units, irregardless of the market that you happen to operate in, you really have to operate with your head on a swivel, right? Because in some cases it makes sense, to not go with the diamond level finish if you can't achieve that yield on cost. And so you might need to, go down to the gold level finish, as an example, in order to, maintain a strong occupancy as well as be able to, push your pro forma rent.
Right, right. Are you experimenting with any of those new materials that are like that super hard, like the liquid concrete, whatever finish it is?
We haven't experimented with that quite yet. Certainly not opposed to that, but the majority of the units that we renovate, again, thousands per year across, all of our acquisitions are all relatively, boilerplate and cookie cutter, right? Because again, we know we can source those materials, at wholesale pricing from the supplier relationships that we have in place today. So certainly not opposed to using some of the kind of latest, cutting edge, technologies, especially if it helps to maximize investor returns.
Right, right. Insofar as your cost per unit to renovate, then do you have three tiers for the most part?
Yeah, that's exactly right. Kind of on the lower end tier, we're looking at about $7,500, for full interior renovations. And on our higher level scope, we're around 11,000 to 12,000, per interior unit for full renovations. Of course, that does not include any of the exterior, renovations, where we're, largely fully renovating the pool area, the leasing office, the clubhouse, obviously landscaping, rebranding the asset, which involves, a full, three-tone exterior paint scheme across the entire property, new signage, new monument sign, with LED backlighting. So everything is really going to be completely rebranded, to Rise 48 with our signature, exterior paint scheme and so forth.
On the interiors, do you have a couple different colors or do you stay with one?
Yeah, it's mostly kind of that blue gray is kind
Oh.
of the latest, kind of color scheme, that we've implemented across the entire portfolio. For those that are not watching this video recording, I'm kind of wearing right now that blue gray
You
that
are.
blue gray finish that we typically that's really our signature colors. It doesn't mean that we're going to be locked and loaded, with that paint scheme forever. As you probably could imagine, about every 15 to 20 years, it seems like the color schemes, change, in and out of favor.
Right, right. Now, I believe you get or you tend to just buy gardens 2, 3 story for maybe. Do you have any single story or what's the situation there?
Yeah, no, I would say most of our properties are kind of that garden, garden variety style, right? Where it's going
Okay.
to be, 2 to 3 floors, right? It's, most of our properties that we acquire are going to be anywhere from 100 to 400 units, right? And that could be anywhere from, 8 to 20 different buildings, right? So it's your traditional, garden grade apartment communities, where again, most of the buildings are going to have, 2 to 3 floors.
Do you stay away from any of them that require more sprinkling or emergency equipment, things like that in the
Yeah, I
different?
mean, those are typically things that we look for, right? Another example would be, if the pitch of the roof is not, adequate, that's certainly something that we stay away from. We don't like to acquire properties that have, old copper, plumbing, right? Electric, old sub panels or electric boxes or breaker boxes. We don't like boilers and chillers, right? I mean, there's certain types of properties that we just simply won't, they won't pass it. They won't pass our underwriting process because of some of those factors, which as an operator now that has transacted, on over $2.5 billion in transaction volume, some of this stuff we kind of learned the hard way, so to speak.
Well, and going back a bit to the track record, you said I think 65 projects. Is it
We've acquired
acquired?
62 apartment communities and we've sold
60,
11.
62 though, over how many years or months? Is it like
Seven, seven,
67
seven, 7 years.
years?
We've acquired 62 properties over 7 years and have sold 11 of them.
So yeah, I know when I was looking over the track record, I haven't looked again lately, but it was like, holy moly, it for a long period was one a month. That's an amazing kind of a track record. You have to really have your stuff together to be able to do that and to do it well, which you're known for doing. So that's one reason I really wanted to have you on the show too and be able to introduce you to the audience because you have that diverse background. You're into several different deals yourself, but of all the sponsors to pick to work with, you're dedicating a lot of time to Rise 48 and understandably so. And so but in your other world, you're doing only passive, or do you do any active at all? Any active acquisitions?
I have stepped completely off of the active wheel, so to speak. I think that everybody kind of gets to a certain maybe age in their lives where, they want to have margin, right? They want to have balance. And for me, allocating or finding additional time in my already busy schedule, to be an active owner operator of single family homes or small multis or moving into other asset classes. While I certainly don't lack the experience and the network and the education to do it on my own, I just don't have the appetite anymore, Ginny. And the truth is because I have 4 children. I'm happily married to a woman that I met in high school. We've been happily married for over 25 years now, but we've known each other for almost 35, kind of a thing. And so my 4 children want dad to be involved in their lives, right? And so my evenings and my weekends are no longer spent dealing with our active real estate investments. They're instead spent on things like coaching my kids' hockey teams, showing up to figure skating and gymnastics, competitions, and dating my wife a couple times a week.
That's excellent. That really is. All right. Well, and like I told you, we need you to have a main takeaway that we want people to remember after they've listened to this, besides getting to that question we ask everybody. And I got to say thank you. You said the word pivot 3 times already, which you get extra scout points for that. But yeah, so what would you like people to take away from hearing this interview?
Yeah, the important thing that I really learned is before you take action on being an active investor or a passive investor, the most important investment you can make is in your own education. Okay. So following folks like Ginny on the pivotal, podcast. I host my own podcast called The Freedom Point. Finding good books that are out there. I'm not telling you to necessarily go purchase my book, but I wrote one called The Fundamental Investor, which talks all about my journey, as a limited passive, investor, and the things that I learned, in evaluating sponsors, evaluating deals, those types of things. I talk about, deals that were home runs, and I talked about deals that really didn't quite go so well, and my lessons learned. And so I think it's incredibly important, again, that people, before they deploy capital into any type of investment, they need to understand, about the operator, they need to understand about the deal, and they ultimately need to invest in their own education first.
100% for sure. I haven't read your book yet, but I will. Do you have it on Audible?
I don't have it on Audible, but you can grab a copy on Amazon. Again, just search Fundamental Investor and you can grab a copy there.
Yeah, we'll put that in the show notes along with how to reach you and everything. But before you say how to do that, I ask everybody what if there's a pivotal person or event that's brought them to where they are or propelling them towards some particular goal. So, do you have something?
Truth be told, I can think of a dozen people's names, but since we're down to just one, and we're specifically here to talk about real estate investing, really that individual was Todd Dexheimer, a close friend of mine. He's an operator out of the Twin Cities in Minneapolis, St. Paul, where I live, and he was really the operator that got me started, on my journey in passive real estate investing. I invested with his group in a number of different deals. Todd's not only a friend, but he's also really been a mentor, of mine in the business, and has really challenged me to continue on my own personal, education journey. Obviously learning the reps, encouraging me, what, resources to follow, and, who's kind of reputable, in the space. So I consider, Todd Dexheimer to be that pivotal person in my life.
All right. So as I explained before, what we do is you or he or I will get in touch with him. We'll figure that out later. But if he comes on the show, then we'll definitely do some shout outs and special promo. And he gets a lapel pin that says he's a pivotal person. And so he gets added to our list too, that goes on our newsletter. So there's some perks. But anyway, well, very good. Well, so I want to go ahead and be respectful of our time here. Why don't you go ahead and tell people how they can reach you?
Yeah, I'd say probably the best 2 ways. You can connect with me on LinkedIn. I'm fairly active on that platform, as Ginny had mentioned. You can search me there under Jeremy Dyer, Dyer. You're also welcome to connect with me on our website at rise48equity.com. Again, that's rise48equity.com.
Very good. All right. Well, thank you. And we will have all that in the show notes.
Yeah, thanks for
Appreciate it.
having me today, Jenny.